The 30-year fixed mortgage may be the ultimate tool to fight against inflation. The fact that there is such a thing as a 30-year fixed mortgage is baffling to me, because I do not believe it represents the amount of risk that banks are fundamentally taking. I'll give you this mental exercise. Just imagine for a moment that you are working and you're saving. Like the average well-to-do American may be able to put away $20,000 a year if they're saving, maybe $50,000 a year, maybe $70,000 a year. I'm going to say $50,000 a year. How much money can you really save in a year after all the expenses and all the taxes and raising your family, paying your mortgage, right? How much can you really save a year? 50 grand. That's a good saving year for anybody. How much would I have to pay you to borrow $500,000 to go buy myself a house? How much would I have to pay you for 10 years of your hard-earned savings, assuming you were going without and you were really, really saving and you were really putting it all on the line and you were going without some things you wanted to do? How much would I have to pay you in interest to borrow $500,000 to buy myself a house? I would bet money it's more than 6.8%. It is absolutely more than 3.65%, which we were at for almost a decade and a half. This rate that people got used to was artificially low. It was only ever there because the government was printing money and artificially suppressing that rate. This rate is still artificially low, and that's why when you look back at the 70s and the 80s, you'll see the interest rates were in the 14, 15, 16%, because the government had not rolled out Fannie Mae, Freddie Mac yet. The government had not started artificially lowering interest rate yet. The government had not established a secondary market where mortgage-backed securities were being sold yet. And by doing that, they were able to drive down interest rates on 30-year fixed mortgages artificially low for my entire lifetime, since the 80s. The important thing to understand is that those rates are still low, and the fact that a 30-year fixed mortgage even exists is incredible. It's like the ultimate tool for financial wealth. And it also is the ultimate tool to fight inflation. I don't want to spend too much time on that. Now, people are going to ask, but what happens if rates go back down? Like, rates are high right now. I hear that all day, every day. Again, Bedrock helps people buy real estate. We're getting to that. Bedrock helps people buy real estate. And the bottom line is we deal with interest rates all day, every day. So there's only three things that can happen if interest rates change. There's only three options, right? They can go up. What if they go higher? Okay, let's say I borrow at threes are the old days. Sorry. Let's say I borrow at 6.8 right here, right now, to buy a piece of investment property. What if they go higher, right? Well, then I will be grateful that I got at 6.8. If interest rates go to 15%, I'll be grateful I've got at 6.8. Note, I'll look back at that fondly in 20, 30 years. If interest rates go to 30% or whatever the crap, I will be grateful that I'm locked in at 6.8. If they go higher, I will be happy. What if interest rates go lower? If interest rates drop to 3.5% again, I'll just refinance it. I'll pay the fee. I'll pay the $2,000-3,000 to go and refinance that mortgage and get a new lower rate. Happily. And the other thing that can happen is nothing changes. They just stay at 6.8 forever, at which point I'll be pretty happy I bought a piece of real estate at 6.8 that was a good cash flowing asset. So they can only do three things. They can go up, they can go down, they can stay the same. Any of those situations I'm totally fine with. I would rather buy a good cash flowing asset today and ride the inflation wave and let it go up in value, let my rents go up, then stay on the sides of the market because I'm waiting for interest rates to go down again to 3.5%, again, because they are not actually that high. They are artificially low still because of the way the government subsidizes mortgages. So with that being the case, I've always loved real estate. Okay, over a decade in financial advice, consulting on almost $300 million. This is what I saw. This was the portfolio breakdown that I saw. 20, 30% of people's portfolios was in their 401ks, stocks, or bonds. The majority of the wealth I saw was in real estate. 60, 70% easily was in real estate.
When that many people have all made the same decision to say, hey, getting a piece of rental real estate and letting it inflate over time, getting a piece of rental real estate and adjusting my rents over time, getting a piece of rental real estate and paying off my mortgage over time, if that is just what I saw time after time after time, I cannot even tell you how many times I've seen that same story told. That people throughout my entire career who bought a good piece of real estate and then just let it be, That's the same argument for gold. The same argument. It's just buy it and set it under your bed and let it be. Now, you have to deal with real estate. And I realize that is the one big, but Jeremy, you got to deal with it. Bedrock will deal with it. I run a whole company. We've helped people buy like 5,000 houses. We deal with hundreds of properties a month. We deal with property management. We do the LLC setup and compliance. We do the administrative. We hire the property manager, vet the property manager. We keep the property manager honest. We keep the operating capital account up. We just let you know if there's an issue, right? So there's ways to do real estate that's still really passive. I'm just saying, if I had $100,000 right now to invest, and I was either going to buy a piece of gold or I was going to put a down payment on a piece of real estate in an inflationary market where I'm concerned about inflation, which we should be, I would buy a piece of rental real estate on a 30-year fixed mortgage 1,000 times out of 1,000 for all the reasons I've said. Because even though it seems counterintuitive, when you look at it piece by piece, you realize real estate will pay you the whole time, gold will not. Real estate will go up in value, so will gold. Rent will go up over time, but your mortgage payment will stay the same. There's just so many pieces that are so enticing. And candidly, if this interests you, you should just book a call with Bedrock. The number is 833-255-0055. Just book a call with us. Have a conversation. If it's not the right fit for you, it's not the right fit for you. But feel free to just get on our calendars and have a conversation around what is good in the market right now. If you're thinking there's nothing good in the market, now is not the right time to buy real estate, you couldn't be more wrong. The question is, if you're wrong, would you rather know now or would you rather know in 30 years?